Good evening, everyone. Welcome to the channel. Today I am going to talk about Realord Group interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. And Realord Group Holdings Limited offers a diverse range of businesses and services across various sectors. The company's key areas of operation include property development, investment, and management financial services such as corporate finance advisory, asset management, securities brokerage, margin financing, and money lending, environmental protection through the dismantling, processing, trading, and selling of scrap materials, motor vehicles parts distribution and sales, citizenship application and consultancy services, educational facilities, student apartments, hotels, resorts, commercial developments, shopping facilities, universities, and related amenities, cinema operations, sales of hangtags, labels, shirt paperboards, and plastic bags, financial leasing and conference services, consultancy services, as a marketing agent trading in electronic products and computer components, e-commerce platform development and sales. These businesses and services are spread across Hong Kong, mainland China, Grenada, Japan, and internationally. In the skyrocketing stock price of Realord Group, a year of growth and excitement over the past year, Realord Group's stock price has experienced an astonishing surge of 125.54%, making it one of the most notable performers in the market. Several key developments have contributed to this remarkable growth. Firstly, the company's positive full-year 2024 results announced on March 31, 2025, showcased a significant increase in revenue and rental income from its property segment. The financial services segment also benefited from interest rate cuts, further boosting the company's performance. Additionally, Realord Group has been exploring new strategic directions through potential acquisitions, including the discussion of mobile game rights with an independent third party. This could signal a new era of expansion for the company, exciting investors and driving up stock prices. The market's enthusiasm is evident in the high return over the last year, noted by investing.com, with a reported increase of plus 175.29%. As the 52-week trading range shows, Realord Group stock has made a substantial climb from HK $5.04 to HK $12.95, solidifying its position as a market leader. The primary drivers of revenue growth or decline can be identified through a review of the financial summary. On one hand, revenue growth is attributed to an increase in goods and services by 12.1%, as well as significant sales from motor vehicle parts, plus 138,410, and scrap materials, plus 136,695. The financial services segment also saw a notable increase in revenue due to various factors. On the other hand, revenue decline drivers include a decrease in rental income due to reduced occupancy at Sincere Mall, as well as a loss of HK $32.3 million from discontinued operations. Additionally, both the property and financial services segments experienced significant decreases in revenue, with the latter being attributed to stricter credit control and downsizing operations. Overall, these factors highlight the importance of diversifying revenue streams and maintaining occupancy rates at key properties to mitigate potential declines in revenue growth. The company is generating positive operating cash flow, a significant improvement from the previous year. In 2025, net cash from operating activities increased to $150,959, up from $95,756 in 2024. Furthermore, the company's operating cash flow has turned positive, reaching $1,048, a substantial increase from the previous year's negative figure of HK $723. This indicates that the company is now generating sufficient cash from its core operations to meet its financial obligations and invest in growth initiatives. The company's debt level and interest expenses have undergone significant changes over the past period. In terms of debt level, non-current liabilities increased by 3.6%, while bank borrowings rose by 2%. Total bank borrowings also saw an increase from $9,159,398 to $9,418,954. However, interest expenses have decreased significantly due to lower interest rates in mainland China. Notably, interest on bank borrowings and overdrafts dropped by 28%, while interest on other borrowings increased by 36%. Finance costs also decreased by HK $67.8 million from HK $300 and $63.8 million to $196 million. Overall, the company's debt level has seen a moderate increase, but interest expenses have declined substantially due to favorable market conditions. The company's financial performance varied across different segments. The financial services segment stood out as a strong performer, with significant profits of $30,613 on page 19 and $15,494 on page 18. On the other hand, several segments struggled to break even or incurred substantial losses. The environmental protection segment, EP, was particularly underperforming, with losses of $24,955 and $71,327 on pages 18 and 19 respectively. The motor vehicle parts segment, MVP, also experienced significant losses, totaling $31,797 across both pages. The Latin America and Caribbean segment, LAC, incurred a loss of $8,563 on page 18, while the others segment reported a minimal loss of $19. Overall, these poorly performing segments pose challenges for the company's overall financial health. The financial summary of the company's performance reveals two key aspects regarding shareholder returns. Firstly, the company has not paid dividends to its shareholders, as explicitly stated on page 53, where it is mentioned that an interim dividend is not recommended. Furthermore, there is no mention of dividend payments in the document, reinforcing this conclusion. On a contrasting note, the company has indeed engaged in share buybacks. Specifically, page 57 notes that 1,600,000 share options were exercised as part of these efforts. This indicates that the company has chosen to return value to its shareholders through the repurchase of shares rather than dividend payments. That concludes the financial summary for Realord Group. Feel free to comment below, and I will be happy to answer them when possible.